Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Wednesday, June the 16th, 2010. And the Bulls got hit with a bunch of fundamental data today that just didn't support their argument. And tomorrow is more. We got the unemployment data for the week coming out tomorrow morning at the open. So if you're holding to the close, sorry. Okay, regarding the unemployment data, of course, I do not know what it's going to be. I can just look at the trend that we've been seeing for the past couple of months and say, expect it to be bad. I mean, it's been bad for a couple of months. Why should this time be any different, right? Right. So it's easier for me to call it to be a bearish news as opposed to bullish, though you might get surprised to the upside. But even if you did, let's have a look at this chart. Let me show you what's going on here. You've got the Dow Jones Industrial Average, and this is a 6-month chart. Each one of these candles is a day, and she's made a move to the upside here on that bounce. We told you that bounce was coming. We've actually called this chart 100% perfect, and so we told you this bounce is going to happen. Now we're telling you it's going to peter out. And let me show you some couple items you need to be focused on here, okay? As a technical analyst, you're looking for trends. So you want to see, a bull trend looks like this. You've got higher highs, higher lows, trending from back here, higher highs, higher lows. Oopsie. Okay, here's what we got here. Let me get that out of the way. So that's what you would look for if you're looking for bullish conditions. And actually, as a technical analyst, you shouldn't be looking for bullish or bearish. You should be reading the chart and just doing whatever it says. So here we have a high point, a lower high, a low point, a lower low. All right, based on those 4 items right there alone, you've got a bear market. Okay, just set it right there. Okay, you don't need to know anything else. Now, let me paint the picture for you. Right now, we've got a lot of people out there who still want to be a bull. Now, there's a bull out there in the market, and it's got like 50 fundamental swords, and it's laying on the ground, blood coming out of the nose. It's twitching a little bit. And there's a couple of guys, and I'm going, "Come on, baby, ride!" Yeah, it's not doing it, but the fundamentals came in today. You had more and more evidence of a double dip coming up. We keep saying this is going to happen, and now the fundamentals are coming out, kind of proving our thesis. And the retail data come in suggested the same thing, and the unemployment data that's been coming out has been really bad, and it's expected to be worse for this month. So you're facing that kind of headwinds if you're trying to be a bull. Now, here's why they're trying to be a bull. You've got a lower low, like we said here. You had high point, lower high, low point, lower low. Then you had a bounce up to this level, and then a fall down here to a lower low as well. Okay, still in the downtrend. And now you've bounced up here and broke out of this previous high. The bull, right? It's back. It's alive. Wrong. The way you analyze a chart, you've got to have 4 points, okay? And you don't. You have broken up and you've got 2. You've got this point is a high point, this point's a high point. Now you've got to pull back down and make a consistent trend higher on the low points, all right? Let me see if I can make that a little better. Basically, my point is you being premature in calling this a bull market. All you have is a bounce, which we called for. We've told you also that this bounce will not be sustainable, so when it pulls back down, it's going to break. And that's what these signals right here, these sell signals are telling you. Whenever this gets tested, it's going to break down. So we've kind of already showed you guys that. We've shown you a bunch of different fundamentals, a bunch of different technicals over the time. We do each one of these videos every night. We can't put everything into one video. Of course, we have time limits. So if you don't, like this particular analysis, go back and watch a couple other ones. We heard somebody talking yesterday about analyzing our volume analysis, and they were saying that's not enough to be a bear market. Well, watch a few other videos, bud. Come on, we can't put it all out there for you every single day. All right. Something you need to be paying attention to in this little move to the upside here. I spotted it yesterday, but it was only 1 day, so I didn't say anything. But now we've had 2 days of it, so let's go look at the intraday view. Okay, this is an intraday chart of Dow Jones Industrial Average. Got a couple days here, 4 days, and the time period is 10 minutes. When you see a market moving in a bullish move higher, it has a particular pattern. It's got supports, it's got advances, it's got supports, and then it starts to do this number. That's not good. This is not the bull market thesis. Bulls take the stairs, bears take the windows, okay? This is how it should be growing. That's not what it's doing. It's doing what we call a bull trap. Let me show it to you real quick, and then I'll show you what one we should call it in the past. Here you got this little trend line right here, snap. This little trend line right here, snap. This little trend line right here. If that unemployment data comes out tomorrow, it could be a catalyst to go snap. Okay, so keep an eye on that. Like I said, this is going to fail, and it's just a matter of time. So we're shorting into it as opposed to going long. Let me show you another picture of a bull trap. And this is a chart of ACL, that's the ticker symbol, Alcon Inc. Back during this time period, we saw this bull trap setting up. We said short it, short it, short it, short it, short it. And a lot of people were like, no, you're wrong. It's a bull move high. And boom, boom, boom. Okay? So, yeah, we know what we're talking about. When we spot that stuff, you need to pay attention. It's not proper growth. And when it's not proper growth, it's a fake. Let's have a look at the NASDAQ right quick. This is a 6-month chart. Each one of these candlesticks is a day. You'll notice up here, we've been telling you guys to watch the slow stotch indicator. Once it gets back up to the overbought, the game is over for the move to the upside. This one's almost there. It's already happened on the Dow Jones. It's already happened on the S&P. So those guys should start to roll over now, which goes perfectly in line with the fundamental data, the timing of the fundamental data is coming out, as well as the timing of forming that right shoulder we talked about yesterday, a head and shoulder pattern. Okay, you got this number going on. All right, it's the head. This is a big sell signal that you definitely want to pay attention to. You can't ignore these guys. They will kill you. You've seen them before. We pointed them out yesterday, so check that video out if you haven't seen it already. But be watching this average because the run up here is almost over, and I can back that up with a few other items as well. You'll notice you've got 1, 2, 3, 4, 5 days to the upside, 5 consistent days of gains. This average tends to do 6 on the high end. If you go back and you just read the chart and say 1, 2, 3, 4, 5, 6, 1, 2, 3, 4, 5, 6. That's about the high end average. So if you had another update tomorrow, you'd be at the high end average. If you were to hit 7 or 8, it'd be a easy short. You'd know that the odds are now stacked in favor of a major pull lower. Okay, so keep an eye on that. This is going to be rolling over, like I said, and as these signals indicate here, these inverted hammers, they're telling you when it's tested, it's going to break down. You also have that same indication by the divergence lines. You've got the low point here, low point here, that's trending up, while low point here and low point here is trending down, and low point here and low point here is trending down. That tells you that this move in price, this bottom here, is a false bottom. It's going to break down, and that's just another reason to be listening to what I'm telling you here. Also, volume getting weaker as we go higher. That's another telltale sign of the end of a run. So everything is basically telling you to get out, get out, get out, get out, get off the bull, kill it. Jump on a bear, ride a bear. I'd like to take a moment before we look at our disclaimer to thank all of our subscribers to YouTube. Everybody who's been supporting this free service. We came out a few months back. We told you we want to make it 100% free and keep it 100% free. At that time, we had like 100 YouTube subscribers, and we told you, we'll give you our very best analysis, and we've done a very good job here doing that. But we can't, survive without the support of our followers. If they're not, sharing our videos online, if they're not referring their friends, we're not going to last. You guys have actually done that substantially. We now have over 1,300 YouTube subscribers, and that's awesome. I want to thank you guys for that support. We couldn't do what we do without you, and we need you guys to continue doing that support, and we're going to continue working our tail off for you. You've called this market absolutely perfect, and we're going to continue doing that. Now, you may not like our calls because maybe you want to be a bull or whatever, but we're just here to tell you what the charts are saying, what the fundamentals are saying, and smart money listens to that, and that's how they're going to move. So you might as well move with them as opposed to against them, because then they're going to kill you. Yes. If you haven't already subscribed to our YouTube channel, please do that. Just go there to our YouTube channel, click the subscribe button, everybody's happy, and then I don't have to hit you with a stick, okay? Awesome. Let's have a look at the disclaimer. The disclaimer. You can read. You can't? Well, go learn. Okay. Thank you again. God bless. Stay on the short side. This market's going to break down.